I don't know what the fuck I'm doing. This is number 8, 8 maybe, episode 8 of A to Z, A to Z. We're getting you guys A to Z. That's the fucking name of this game. So, what is today on? Draw on liquidity. Draw on liquidity. We are going to be talking about liquidity inside of the market. So, what do I want to do? I want to pull you guys over here to the blank screen. We need to talk about what is the most best thing to be looking at for our draws, and what even is a draw on liquidity. All right, you guys remember, I gotta change this shit again. I change it every time because I use this shit when I'm doing my shit on. There we go. Boom. Okay. Make it a little bit more of a skinny dude. Make some wicks on him. It's all fucked up with the spacing. Great. I love that. Here, can we do this? Can we make him like a little fried? All right. Okay. What do we need for draws on liquidity? Where can they be? Where can they be? So you guys know about our trends. You guys know about our highs and lows. So you know about highs and lows of candles. You know about trends and when they change. And you also know about opens and closes of candles. What we are going to be focusing on for draws on liquidity is the highs and the lows of candles. So, what do we know? We know that when we have two candles together, when it is a blue and a black candle next to each other, let's do it like this. Bang, bang. And then we have a black candle next to each other. What do they form? From our last video with the trends, they form a high and a low within the market. Like this, boom. And we put it at the top of the wicks of the candle. And when we are identifying the draws on liquidity, we are noticing that they are at highs and low points within candles. When we're talking about when a trend or a market is going towards something, we're saying the market is bullish, we are saying that the market is going to be going towards these highs and lows, and then underneath and above each high there is, let's just imagine, imaginary air space up here. There's actually nothing that you can see on the chart, but there is something called liquidity. And then underneath these lows, there is something else called liquidity. And why is this? That is because when we have highs and lows in the market, when you're trading, you always have, let's just go into this. When you're trading, you always have a stop loss and a take profit. When you set a stop loss, people in the retail world will put their stop loss somewhere above these highs or somewhere below these lows if they're going long. If they're going short, they're going to put it above these highs so that they give themselves a little bit of breathing room if the market wants to say, let's come back up this way, and then we take out this high, sweeping liquidity. We'll talk about liquidity sweeps in a moment, but they sweep out this liquidity. They get people's stop loss triggered right here. And then what does the institutions do? They fill orders based off of those stop losses. So when an institution or a place like somewhere on Wall Street that has massive amounts of money, they have trillions of dollars that they want to use to move this market and move the candles however they want to move them. They need people's money because this game is one-sided. They need people's money or people's liquidity slash their money that they are risking, institutions want that. Let me spell institutions for the life of me. Holy. They want that. They want to take that. They want to use that, and they want to put it in their pocket. All right. They want to be able to take out other people, fake them the fuck out, make them think that the market's going to go in a certain way, so they can collect their money and move their orders in the way that they want. The market cannot move without other people because it is one-sided. They're going to take other people's money and give it themselves. That's how it works. And they do this by manipulating the markets in the way that they want to. When we are looking at these areas, okay, my bad, I had to pause for a second, but what are we going to be talking about? We're going to talk about the most prominent places for where we can look for liquidity to be swept in our strategy. These are going to be a couple of things. We can look at, one, we have different sessions that are such as we have Asia session. Let's just do it like this. We have student letters like this. Asia session. Holy, let me make this text a little bit bigger so you guys can see it. Asia session. We have whatchamacallit? Hold up. We have London session. And then we also have our New York session. Main ones that we're going to be looking at, though, is going to be probably these. I don't think I can bold these at all, but you get the point. We have our different sessions that we can have for liquidity points. And then we also have draws on the higher time frame. And if you remember from the first video that we made, learning how to set up everything, I told you guys to mark out these time frames. And these are going to be the time frames that you're going to use. The maximum one that I use currently at the moment on a day-to-day basis, it doesn't mean that I'm not going to look at these other ones up here at all, but you know, I don't look at them as often. These time frames, they're all correlated and they all tell a story, the higher that you go, of where we're going to move in the long run. So if we look on the monthly time frame, we might see that we're going upwards. We see on the weekly time frame, however, we are moving downwards in a downtrend. We learned about trends. You should know about this. You should know how to spot a trend change. You should know how to see trends. We're moving upwards on the monthly. We might still be moving downwards on the weekly. We might be moving downwards on the daily. We might be moving downwards on the 4 hour. Price is what we call fractal, which means it's a pattern, but it is the same pattern, I believe, on different scales. And you can see this when you go down to each time frame, because we can see each of our confluences and each of the patterns that we're actually seeing on the chart. That's all that this is. It's just pattern recognition. We can see these patterns happen on every single time frame. So if we're looking at the highest time frames that we're using on a daily basis, I'm using A, the 4 hour, and B, the 1 hour. These are the time frames that we're using to determine our bias of, you know, where we're going to be moving and where the draws on liquidity are that are the highest probability for the day. And these two might line up. You might have a session high, like an Asian high, that is also a hourly high. So you just mark it out as whatever. I like to just keep them as, if it's a session high, it's this session's high, or you can just mark them out as hourly and 4 hour highs. But they're going to be the same most of the time. Most of the time you're going to see you have like an hourly draw that is just the Asian session high, and that just is how it works out. But that's just how you're going to have to see it. These are the time frames, though, basically, that we are going to look at to see where draws on liquidity are. And if I can show you what we had today, actually this was a perfect example. I'm just going to delete these so we can see. We are going to be looking at session highs, but what do I need to get you guys to do first? I need you guys to come over here to this button up at the top that says indicators. You're going to add this thing to your chart. It's completely free. You don't have to pay for it or anything. Somebody already made it online. Shout out to this dude. But it is called this. It is called ICT, kill zones, and pivots. And don't mind any of these other ones here. I've had TJR fucking ones here, the person that I learned from, or a couple of ones that I made myself that I guess I can share like code for, or I think I can publish to. It's just to help me see on the chart basically. But if you search up ICT kill zones, it should be this one. It's ICT kill zones plus pivots from this guy, Trade for OPP. You just favorite this, or you click it and it adds it to your chart. It's going to add, and it's going to show up with a bunch of bullshit at the start. It's not going to be set up the way that I have it set up. If you open it up, not this one, if you open it up by double clicking it, or if you come over here and you hover on it, there's a settings button right here, settings. You're going to click that. I'm just going to do a slow scroll through how I have it set up right here. So if you want to pause the video and set up yours exactly like this, that should be good. Okay, boom. Okay, should have all the settings set up now. Now, if I'm showing you guys where on the chart that we have these, I'm just going to delete these so you guys can see a bit better. If we have these set up, we are trading different time zones here. I guess the first thing that I should do is probably tell you what the time zones are. We have Asia session that we talked about. That starts at 1800 and it goes till when in here? 3 o'clock. So 3 a.m. Okay, so it goes from 6 p.m. to 3 a.m. Then we have London session. That goes, London goes from 3 until 8. 3 o'clock till 8:30 a.m. So that goes from, Asia session goes from the previous day at 6 p.m. till 3 a.m. And then the London session goes from 3 a.m. to 8:30 a.m. And then we have New York, which has a pre-market, and then it has a true open. So New York pre-market, that opens at 8:30 a.m. and goes till 9:30 a.m. And then New York true open, or just open. You can call it true open, people call it open, people call it a bunch of different shit. It's all confusing. There's 9:30 a.m. till, I think it's like 5 p.m. EST. I'm talking about all the stuff that is in Eastern Standard Time. So if you're not in Eastern Standard Time, or the time zone that is literally Toronto, because I'm in Canada, or New York, UTC -4 right now. I think this changes based on daylight savings time, but you need to just convert this time over to Eastern Standard Time. And then how I told you to set up your charts, if I can show you this. Yeah, you set up your charts to New York, or you set it up to Toronto time, like I have, but I'm just in the same time zone, so that's why I'm using Toronto and not New York. Clean that up. But you need to convert this from Eastern Standard Time or UTC -4, and then you will get the actual times that you need to put into this map right here. And I believe it goes off the times on your chart, if I'm not mistaken, but could be wrong. Don't quote me. That's basically it. So you set up these lines right here, and then if I go to the 5-minute time frame, I can show you guys actually what I mean. Okay, So now that you have it all set up like this, I'm actually in Asia session, so I'm going to go back to when it was 12:30, so we can see Asia session time for previous day that we just had. But today was a perfect example of liquidity getting grabbed and then moving into the other direction. If we see that we have these things on the chart, just ignore this box right here. This is the position that I took today. If we're looking at the previous sessions that show up, and these will show up every day at 9:30 a.m. So let's say it's 9:30 a.m. in the morning. We're going to log on to the charts maybe around 9, and we're going to see these lines that get formed for us. These lines are going to show us each session's time, and it's going to show us the highest point that the candles got to during those time frames. So what did I tell you? If I go over here and actually favorite a vertical line, and I put it right here, we're going to mark out the times from what I told you guys. So we're going to mark out Tuesday, the previous day, at 1800. We're going to go to 3 a.m. like this, boom. Because why? We have our times right here. So we have New York or Asia session going from 1800 to 3. Sorry, I'm just retarded right now. 1800 to 3 a.m. So 1800 being right here, we can see it at the bottom. It moves right here as we go. The time, you can see it moving as I move my cursor right here. If you're new, I'm starting to just not realize that I'm not going slow enough for some people. 1800 right there. Boom, you see it lines up. It's from Tuesday. We're on Wednesday right now, so we're going back to Tuesday at 1800. We're going to go to 3 a.m. and we're going to do the same thing, but on the current day. So we're on Wednesday. We're at 3 a.m. We mark that out. Boom. Okay. And then you can do this if you want. You can mark out 8:30, or I just skip that. I let the indicator show me, but it's going to show that London session was lowest point right here, and Asia session had its lowest point right here. It had its highest point right here, and then London session had its highest point right here. Better than us having to mark it out and then put these lines on the chart and then put the lines on for the highest times in between those. That's what I used to have to do. Indicators save me a whole bunch of time. And then we can go to the true open. We can go to New York's 9:30 to 5 p.m., but we can just mark out 9:30. And that's basically what it shows us. We have these time frames where we have the highest and the lowest point that the market went to. And then during these times, when market opens, or when we're in Asia session and London session, we're normally accumulating and doing different things, and prices moving around willy-nilly, whatever. But as you see, there's patterns within the market. Market normally, during these other sessions, so when it goes from Asia session to London session, and then to New York, during one of these sessions, it will normally be the case that we go and we sweep out previous session highs and lows. So the Asia session and the London session are more likely to be swept when new money comes into the market at 9:30 a.m. I'm going to turn on this. This is another indicator that I have. I will maybe publish this, but you will probably be able to find this later. This just marks out everything that I put on the chart already by myself manually, but it does it for me. Okay, boom. I have all these horizontal lines. Don't worry about them. It's whatever. Okay. Boom. During New York session, when we open up at 9:30 a.m. right here, it's going to show us that we come down normally and sweep out these other lines or liquidity draws that have a bunch of orders normally resting above and below them. So if we go over here, we have liquidity that is resting below this because people during Asia session were placing buy orders to move the market up this way. And when they were doing that, they were placing their orders with their stop losses below this point right here, thinking, haha, we're never going to come out and take me out. I'm going to make money today. I'm going to do a bullish long right here, boom. and my stop loss is never going to get hit. Newsflash, it's going to get hit, and other people, like the institutions and the people and the banks that open at 9:30 a.m. in America, and then they get all these people into the office, they say, hey, where are all these orders that we need? They get into the office and they go, hey, these look like pretty good draws because this is the lowest point that we got to during the Asia session. So what are we going to do as we move through the market opening? We are going to come down and sweep these out. I'm on the S&P 500, but if we see from 9:30, we come down, we sweep out this Asia session low, and then what did that allow me to do? That allowed me to take a long up to the Asia session high because they wanted to sweep out people from Asia session and then also come down, sweep them out, and then come back up all the way up to sweep out them again at London high, getting even more money into their pocket. So they made money here when they took out people on the S&P. They made money down here, and they were able to reverse the market. You see how aggressively we take that out and then move instantly in a, like almost straight back up to the other side, move directly back up to the upside to be able to take out the other draw up here, putting even more money in their pocket. These two lines are just above each other or on top of each other, but they come back up here to take out even more money and put more money in their pocket. Okay, so now we know about session highs and session lows and how I use them to determine good draws. What are we doing when we are looking for these draws? The first part of our actual strategy is what? We are looking for one of these draws to get hit. Step one is watching and waiting until a draw actually gets hit. Until a draw is actually hit. This is going to be the first part. I'll talk more about this later in later videos. I feel like I say that a lot, but it's going to be actually talked about later in later videos. Step one is literally watching and waiting for this to come down and get hit. I watched it get hit on S&P, and then I was able to take a trade after the fact, after it getting hit to these London session highs to basically take profit at. And that's how I knew where the draws on liquidity were for the day. And then if I show you guys for this day, there is 4-hour and 1-hour highs that are also within this range right here. Okay? If I'm going to show you before 10 a.m. to show the hourly 9 a.m. Let's go like this, boom. And then, yeah, it shows how we were before we moved for the day. If we're looking at the 4-hour time frame, we are going to be looking for the highs and lows that are not marked out by our indicator. We see that these highs right here are already marked out by our indicator. We can see it right here that we already have them marked out. We have these lows that are marked out. These aren't lows on the 4-hour time frame, but they might be on the 1 hour. Yeah, they are. So that's how that's marked out, and that's why it looks like that. But what are we looking for when we're looking for highs and lows? And for trend changes, basically, we're looking for two candles grouped together, a black and a blue candle, an up candle and a down candle, and we are looking at the lowest point for their candle. And I'm going to show you guys what I normally do when I have a 4-hour low, so I can determine if it's a 4-hour low, if it's a 1-hour low, if it's a 5-minute low. I just come over here to the text, I write in 4-hour like this, and then I save it as a template. I already have it saved right here, but that's basically how I do it. I do top, and then I do left alignment, and that's basically how I can determine it. And then if I left click on my mouse like this, I left click it on the line, I click or go up here to template, I go over here to 4-hour, and I go like this. This is not required for you to do. This is just so I can see which time frame this low is on, and it makes it easy for me to determine which time frame it's on. So I go like this. I go 4-hour, 4-hour. Is this one already taken out? Yeah, it was already taken out, so I don't have to mark it out. Already taken out, then you don't have to mark it out. we are looking for where price is going to go in the future to take out draws. Not where it's already taken them out. We are looking for draws on liquidity that we can target to take out. So we're going on the 4 hour. Let's go over here to ES. I just changed the time frame. Instead of clicking on it, you can click the space bar and it'll just switch between these. If you have them favorited on a list, you just click the space bar and it'll go between them both real easily. Boom. It's a good keybind shortcut for you guys. Okay, you see I already have this one marked out, but I'll do it again for you. Mark this one out because we have what? A down candle and an up candle. Take the lowest point between them. Come down here. We mark it out as the 4 hour low. We mark this out as the 4 hour high because it was not hit yet. It was actually dead even with this other high right here. These are other draws in liquidity that you can be looking for, but I will talk about these later. These are equal highs. So how do we know that they're equal? We mark out this 4 hour high right over here. And then what did I tell you guys when we were identifying trends and identifying highs and lows? You hover over the candle and you can look at where the high point is. So we see for the high of this candle, it is 7454. And then what do we know about this candle right over here? Well, we already put a line on it and we already magnetized it, so we know it's directly on that point. 7454. 7454. We know that these are dead equal in the market. So they have not been taken out yet. They have not been pushed above and liquidity has not been grabbed. They are dead equal with each other, so they are just basically, it gives it even more of a chance to be taken out. And I'll show you guys these other draws that are really likely to be taken out as well. But if we look right here, are we going to be marking out lows that are all the way down here? Probably not. You know, you'll get more used to this, but you know, market is not going to dump entirely a percentage point and a half probably down to these lows. You know, maybe if I was watching the market and I saw, you know, that we were moving and then we took out these lows, then maybe I'd put these on. But you know, you're going to be marking out just things that are within the vicinity of, you know, being realistic. And then we will drop down to the hourly time frame. I will do the same thing. So I'll look here. Is there anything I can put on the charts? No. Okay, can I go over here to the NASDAQ? And can I look over here to the left? Yeah, I can. I can put on these ones here because these are high right here. Can I put on, I've already put on these two, so I don't need to do those two, but I can also put on this one right here because I see right here that this one's tucked in here, and I can put this one on as a 1 hour. Okay, so now we have a 4 hour, 1 hour, 1 hour, and a London high that are all stacked up to on each other here. So this is even more of an indication that, you know, we are going to move higher for the day because we have stacked up draws on liquidity. We have 4 of them right here. It makes it even more of a chance. What do we have to the downside? Well, we only have this one draw right here. So what am I looking for? Well, we're probably going to take this one out because, you know, it's a higher chance that we're going to take it out on ES because we're already moving down towards that low. It's probably pretty likely that we'll take it out, but are we going to be able to push down here all the way down here? Or is it going to be more likely that people are going to be lazy? This is going to be the place that we get a bunch of money in the market makers' pockets, and then we are able to push us up higher and get even more money. Or do we want to sell and sell and sell and take more money out of our pockets to be able to push down here, just to be able to get people out down here? Or is it more likely that we'll take them out right here and then be able to get double the amount by going up here? So you have to look at it. You have to look and say, you know, this point right here is very viable for us to go down and hit still. But then after that, what are the draws going to be for the day? We're going to look and see 4 of them up here to the upside compared to 1 of them down here, and we're going to say, you know, it's probably more likely that the draw on liquidity is going to be higher for the day. It's probably more likely that we're going to see price move to the upside instead of move to the downside. So we see that, we see that we literally move down for the day. Jeez, bro. We move down here, we take it out on ES, and then we instantly move right back up to the upside, and we take out even more to get more money in our pockets for the market makers. Boom, boom, boom. If you don't know where liquidity is going to be for the day, then you're going to be lost, and you won't know where to target for your strategy, basically. And one thing that we need to keep in mind is that this is the first step when we are looking for a reversal in price and where we're going to be taking something from our strategy. We are going to be waiting for one of these high time frame draws to get hit. So we're going to be waiting for a session high or low to be hit, or we can look for 1 hour or 4 hour high/low to get hit. And what did we get right here? This was step 1 completed. We had a session low get hit. We had the market makers filling their orders right here so they didn't get slippage when they like clicked by insanely amounts. We can see right here they clicked by insanely. Over the next 3 hours, they clicked by, being able to push their orders all the way up there and then grabbing people out even more for more profits. Okay, that's basically how they did it. And then we can talk about one more thing. Just give me 1 second. Okay, I also want to talk about, because we saw it in today, we want to talk about equal highs and lows. And we also want to talk about like almost, we'll call them almost equal highs and lows. And then we can also talk about low resistance highs and lows. This is going to be your guide for literally the in order the most powerful to the least powerful draws on liquidity that you can have. So you have one can be session highs and lows that are tied with 4 hour and 1 hour highs, because they basically are 4 hour and 1 hour highs. And then you also have equal highs and lows that are in the market. When you identify something like we just saw on ES, where you have a high and a low that are dead equal to each other inside of the market right here, and that line up perfectly with each other, those are going to be draws that are really, really powerful, because when we come down and we reject this high right here, are we going to have a set of stop losses that are above this high anywhere up here. We are also going to be having more stop losses get put in when people enter positions on this move right here as well. So there is double the amount of liquidity and money for the market makers to take when those highs get rejected for the second time in a row. And these highs can show up on any time frame. We can see them on the 5-minute, we can see them on the hourly, we can see them anywhere. It's kind of hard to identify them, but once you see them and you see dead equal highs within the market, then it is really good draws for you to be able to take trades off of. And I think that this one is even a dead equal draw right here. Yeah, this one's also dead equal. So I found it on the 5-minute time frame as well. So not only do we reject orders or reject price right here, we then come back up, reject it again, and then what do we see from today's price? We see from today's price that because we have equal highs here and equal highs here, we want to come up and take those out. And we already saw the play out for how fast the market reacted back up to those highs, but that is for equal highs. And it's about second in line to the 1 hour and session highs and lows, but 1 hour and 4 hour and then session highs and lows. But it is like second in line to that, or third on the most important, basically. And then we have almost equal highs and lows. So we can look on NASDAQ today. What did we see over here when we were on the hourly time frame right here? We can see, if I reset it and go back here, showed you that shortcut, I think, in like one of the first videos, we can see that we have relative, or what would you call pretty close together highs. So you'd probably have people that are placing orders and that would have a stop loss being above these highs right here. But because it's so close to this high right here, you'd probably have them stacked up as well, almost like the equal highs. You'd have people placing stop losses above this high up here on this move right here when we had this 4-hour put in right here. But then also when we had this hourly and we had this wick come all the way up here, we probably have people placing stop losses somewhere here or maybe even above here as well. So that's even more of a influence for people to have a trade get taken to that point. I think my thing got messed up. Yeah, I don't know where it went. Jeez, dude. Where did it go? I don't know. But I had the thing, I think on the 5-minute time frame. Holy bruh. Where the fuck are we at? Where are we at, dude? Here, wait, let me do this. Do this, it'll give me back. Boom, 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 boom. Oh, wow. Yeah, no, it's not coming back. Okay, so we have 1, we have session highs and lows. We have 2, we have 1 hour, 4-hour highs and lows. We have equal highs and lows, and then we have relative or almost equal highs and lows. Next thing that we have is low resistance draws. And low resistance draws are normally on the lower time frame. So if we look at the 1 hour and the 4-hour, we see that we don't have that many, highs and lows to be looking at. We have stronger draws because they are on the higher time frames. So we have lower amounts of them. We have like 4 or 5 of them, or we have 3 or 2 of them on this case on the 4-hour. And that's because these hold more power because they're higher in time frame. If we go down to something like the 15-minute, we'll see that we have even more of these highs and lows getting put in. So we have lows right here, we have lows right here getting put in, we have lows right here getting put in, we have lows getting put in right there. So we're already up to 4 on this time frame, and we can see that we have even more getting put in over time. Or if we go to the 5-minute, it would increase even more. If we go to something like NASDAQ on this 5-minute time frame, we see that we have a bunch of low resistance draws stacked up with each other right here because they are on the lower time frame. They're lower resistance, which means that they can get pushed through very easily. Price can easily come up from or come down from this point right here, and it can easily take all of these out because they are low resistance. They don't have that much power, therefore, and then they don't have that many orders holding them up because they're not on the higher time frame, therefore meaning that they can get taken out very much easily, or very much more easily. Just think about it, like people having stop losses underneath here, but there's not as many people having stop losses underneath here as there is on like a session low or something like a hourly low or a 4-hour low, So market makers can easily come down, take out all these people that have all of these stop losses down here that aren't really held up by much, because they got into the move late, or they didn't put their stop losses correctly. But what does that cause for when we have all of these low resistance draws all the way down here? So let's show you. I gotta get a little bit closer so I can see these draws more. Let me show you like this. No, that was good. Like this, like this. What does that cause for? Well, we're at 9:30 open, and what did I show you guys? We wanted to come down and seek out this low down here. Not on the NASDAQ, but you guys can get the point, hopefully. Go on 5 minutes. Boom, what do? We come down and we take out all of these lower resistance draws because they are not as powerful as something like a 1-hour or a 4-hour low or high. So they instantly get taken out, and people in there, boo-hoo, so sad, too bad. They're crying about their stop loss getting hit, but that's just how it is, basically. And basically all it is just these lines on the chart that show us different points of liquidity that are on the chart. Hopefully I was able to explain it in a way that you can understand, but Next, we'll get into actually showing you guys different confluences like fair value gaps, inverse fair value gaps, showing you guys actually how to put pieces together after we get a liquidity sweep, and then we see price moving off of it, and how we can determine if we're actually going to move off of the liquidity sweep, or if we're going to continue past the liquidity sweep being put in. So yeah, hopefully you guys enjoyed this video. Hopefully we were able to understand it. If I can, and you guys get these different indicators put on, and hopefully this one is published by the time you guys see this. So hopefully you guys can like figure out and find this this indicator. But that'll be besides the point. I'll just allow you guys to, you know, put these things on by yourself. You know, get this horizontal line, and then go through with the time frames that I told you, 9:30 to all the way backwards. Just pull up that little thing, maybe take a screenshot of it, put it on like a Google Docs, and just look at it every morning or whatever. Or if you're good with code, just make yourself one. But I'll get that script hopefully posted, and then you can just have an indicator that tells you how to do it. But maybe practice it a little bit so you actually know what you're doing. But hopefully you guys can go back through with homework and look for these liquidity sweeps happening on a daily basis. You can go back on replay or just scroll back through your chart like this and just find previous days and just look for liquidity sweeps happening. And then, you know, look at them, maybe take a screenshot of them, maybe take a little gander at them. Just get used to seeing these things happen. And you'll see, if you look at the market every day, hopefully these things will get hit. The session highs and lows, and hourly and 4-hour highs and lows will get hit on a daily basis, and then you'll either see reactions off of them, or you'll see us continuing to take out more of them. And you'll see that if we have stacked up draws on liquidity, like relative equal highs and lows and equal highs and lows, those get hit really often. So peace. Now, this was a long one, but thanks for sticking through it.